Top AI headlines for today. Poetic announced a $50 million funding round and emerged from stealth. The round valued the startup at $500 million. Investors included OpenAI and a group of undisclosed backers. Poetic will build AI agents that automate financial compliance workflows. The platform will parse regulations, generate filing documents, and monitor transaction data in real time. It plans to integrate with existing ERP and treasury systems. By using large language models, Poetic aims to reduce manual compliance labor and lower costs for banks and fintech firms. The funding signals strong venture interest in downstream AI applications for regulated industries. Poetic expects to compete with legacy compliance software that relies on rule-based engines. Generative AI should shorten implementation cycles and adapt quickly to jurisdictional changes. The company highlighted its ability to update compliance rules without extensive code rewrites. Techmeme reported the deal. Cyera closed a $600 million financing round and lifted its valuation to $12 billion. The Israeli startup focuses on AI-driven data security that protects corporate information from model exfiltration and prompt injection attacks. The round was led by a global venture consortium and included existing investors. Cyera will use the capital to expand its threat detection platform and add support for multi-cloud environments. It also plans to accelerate research into adversarial AI defenses. The raise reflects confidence that AI-related security threats are becoming mainstream for enterprises. Cyera's technology scans incoming prompts and outbound data streams for signatures of known model training extraction techniques. The company claims its system can block up to 90% of attempted data leaks in simulated environments. With new funding, Cyera intends to launch a managed service for mid-size firms lacking AI security expertise. The expansion could broaden adoption of AI safeguards beyond large tech enterprises. Techmeme reported the funding. Meta and Block announced parallel workforce reductions linked to inflated AI expectations. Both companies cited the need to realign resources after ambitious generative AI projects missed revenue targets. Meta cut several hundred positions across its Reality Labs and AI research divisions. Block trimmed its engineering staff and refocused on core payments infrastructure. Analyst Nate B. Jones connected the cuts to a broader pattern where hype drives premature hiring, leading to later downsizing when products stall. The layoffs highlight the risk of overinvesting in AI without clear go-to-market strategies. They serve as a warning to startups that chase headline-grabbing technology at the expense of sustainable unit economics. Meta's cuts targeted staff linked to its LMA2 scaling, such as data labeling and hardware teams. Block reduced its AI-driven fraud detection unit, which had not delivered a market-ready product. The moves align with a sector-wide slowdown in AI-centric funding. Brave Search captured the commentary in a video interview. The Commodity Futures Trading Commission signaled plans to introduce new prediction market rules. The draft framework would bar contracts deemed vulnerable to manipulation or lacking a clear public benefit. The CFTC said the rules aim to protect investors as algorithmic trading and AI-generated forecasts become more prevalent. Platforms hosting binary event contracts must implement robust surveillance systems and disclose data sources used to price outcomes. Contracts that rely on opaque AI models without transparent methodology could be prohibited. The agency also plans periodic audits by independent third parties. If adopted, the regulations could reshape a burgeoning sector that includes crypto-based prediction markets and AI-driven wagering services. Critics argue the measures may stifle innovation and limit the use of advanced analytics for risk hedging. The Commission opened a 60-day public comment period, inviting industry participants and consumer groups to weigh in on the proposed language. Proponents hope the rules will deter coordinated trolling of market outcomes using large language models. Opponents warn that excessive oversight could push developers toward offshore platforms with lax regulation. Techmeme reported the proposal. Nate B. Jones released a short video urging AI teams to overhaul inference pipelines before budgets tighten. He warned that uncontrolled compute spend can quickly erode profit margins when large language models run at scale. Jones recommended 3 concrete actions: profile workloads to identify latency bottlenecks, batch requests to maximize GPU utilization, and employ quantized model variants that retain accuracy while cutting memory usage. He also stressed monitoring cost per token and setting alerts for unexpected spikes. Organizations that ignore these optimizations risk facing budget cuts or delayed project approvals. The advice aligns with a growing industry focus on sustainable AI operations. Jones highlighted the benefit of containerizing model-serving stacks to enable rapid rollout of updates and rollbacks. He suggested leveraging spot instances for non-critical batch jobs, noting that cost savings can reach double-digit percentages without sacrificing throughput. He urged teams to document performance benchmarks and share them across departments to foster a culture of continuous efficiency improvement. The commentary was captured in a YouTube short. Stay tuned for tomorrow's AI news.